sharing my screen. Do let me know if it is visible to you.
Yeah.
Mm, is it visible, the Excel sheet?
Uh, just a second. Yeah, I think it's
Yes,
visible.
it's visible, sir.
Yeah. So this is the first one, like the first tab of a financial model. So basically, what is financial modeling? It's nothing. It is just a fancy term that has been given by many marketing people. They are marketing themselves as a professional, that it is something that is going to make a huge difference, but nothing else. So it is just a financial statement, but is structured in a way that actually helps the users of the financial model to understand different aspects of the financial line items that impact the businesses. For example, we have revenue, and in general we already know that we are able to see that this is published in our public financial statements like annual reports for listed companies. And all this data that I am using in financial model has been taken from screener.in, which is completely free. If you want to have detailed information, then you might have to opt for Bloomberg or Yahoo Finance, or maybe the premium subscription of screener.in. So basically, financial model is nothing. It is just a structured representation of financial statements. Why do we use financial models? Like, why not directly take decisions and just having a rough note of our financial statements or anything that we determine that is important? The thing is, financial model is prepared in a way that it is completely automated. So what you are seeing right in front of your screen, it is completely linked through the raw data, and that raw data is only required to be changed whenever you are making a financial model for different companies. All these things can be done by you very easily. Within 3 to 4 hours you will be able to prepare a financial model, and it is not going to be very difficult, because all these things we have studied in a combination of subjects: financial reporting, SFM, SCMPE. All these things are coming from those subjects. So which fields are using financial models? Mostly the intensive usage of financial model is specifically in investment banking, equity research, and financial planning and analysis roles. And I'm not going to go that deeper what kind of questions or how the interview is going to be performed, how are you going to answer those questions. I'm also going to talk about some of the most important questions that are required to be answered to cracking the interviews, and other things are going to be taken care of by my friend Kaushik, who is a like perfectionist in this, how to present yourself in interview. So equity research and investment banking, how do they use it? A financial model actually helps the researcher or investment banker to understand the complete financial health of a business in a bird's eye view. Like, you don't have to hassle through multiple pages of annual reports or multiple calculations. You will be having every important calculations right in front of you, and that too ensured with the accuracy of formulas that are used. So there are multiple financial models, and not just one. For example, the one you are seeing right in front of you is known as three statement model. It is the most popular one, and many equity research interviews are going to ask you to prepare right in front of them. They will ask you to open an Excel sheet and just get started with it, and you would not be having any idea where to start. Even though it doesn't take that long, it just takes, if you are good with Excel, it is going to hardly take 20-25 minutes to make it. It is nothing. There are three statements, as you know: cash flow statements, balance sheet, and PL. All these statements are directly linked to the raw financial statement data that we take from different resources. It could be like Yahoo Finance, whichever you prefer. I have preferred here screener.in because it is more accessible to a lot of people here. And Yahoo Finance has recently been going through premium subscription, and also it just becomes difficult to get some good information out of them. So in three statement model, you are basically preparing an income statement which looks like a budgetary statement. Like, you are not going to have most of the nuances of normal financial reporting framework or normal income statement as per Ind AS, it is almost going to look like an income statement as per budgetary reports. So why did we calculate all these? Why are these things being calculated? All these questions are going to be asked by the interviewer. They are going to ask you the percentage, why the percentage of COGS actually matters when it comes to manufacturing companies. Like we are using Tata Steels, it is a manufacturing company. So it is highly dependent upon the goods that is being sold. So it is going to make a huge difference for the person who is actually researching this complete sector, and they would like to compare these ratios, these percentages with its peer companies. So financial model, when it comes to equity research and investment bankers, they use it to compare different companies from the same sector. So the usage of financial model is not entirely dependent upon just flashy stuff. We are actually using it as a tool to help us determine the best investment opportunity that is available to us. It is not entirely like we are completely depending on what is visible to us. There are other things, there are other factors that come into this existence. It could be like you are researching the company from a fundamental point of view. You will be reading about management, you will be reading about who are the directors, who are the founders of the company, are they still going to stay? All those things are coming into a part of financial fundamental analysis of the companies. So once we prepare this statement, what we do is that we start linking it. So you can see this is linked through a data sheet. Overview of this sheet is something that we are going to start with. So first tab comes with historical financial statements, like up until now how the company has performed. We want all that information in one sheet that could just help us determine how the company has performed till now. Another thing is forecasting. This is one place where almost every person is freaking out, that how do we perform fair forecasting? How do we know like what is going to be the sales for next year or the coming 5 years? What is the exact way? Are we going to perform the forecasting accurately? The word itself says that it is forecasting, and forecasting is not always going to be accurate because situations change, market changes. Last year the market was outperforming by a lot, and after the mid year the market has started falling, and these all this forecasting, it is quite possible these forecasting is not going to turn out as accurate. So forecasting is something that helps us understand what can be the financial outcome of the company in the next coming years considering the current situations. So the question when it is asked to you, what is forecasting and how do you perform it and how do you ensure that this forecasting is close to accuracy? All these questions are also going to be talked about in the coming time. We will be talking in this session, and you will be very comfortable in answering those questions without a doubt. Another thing is ratio analysis. This is the part you have already studied in your SFM subject, and very deeply you have studied it. It is just that our point of view when we are studying for CA finals, we are always aiming to clear the exams and we are not worrying about how this actually affects our decision making. And all these questions are asked in a way, if you're not even answering this one of the ratios are not answered practically, your interview decision is taken immediately on that answer itself. If you're not able to answer it practically, they will just understand that you did not grasp the concept and you just cleared CA finals with a target to clear it. So ratio analysis is the most important part. Even if you are not able to answer what is three statement model, that will be tolerable. But ratio is something that is not tolerable by investment bankers or equity research interviews or even FDDs. Another thing is weighted average cost. This is a complete weighted average cost model. This is one of the financial models that is used by financial planning and analysis experts when it comes to CFO advisory roles, and you will also be working as a part of companies project enhancements. If the company has new projects, how do they take that decisions? And it is also going to be intensively used by equity research people like how much returns is expected out of a stock, how can they determine whether a stock is undervalued, overvalued. Capital pricing model is used, which is an famous model, the only single model that is used for determination of cost of equity. And another thing is common size statement, a simple question asked in every interview. I can guarantee you this question is being asked in every equity research interview. What is common size statement? And people are always answering it in a wrong way. So we will discuss about this as well. Another thing is intrinsic growth rate. You have already studied this in CA final SFM. Our security valuation chapter was there, and we studied about it. The calculation is obviously the Gordon's growth model that we have studied. And then comes the DCF. DCF is also we have studied in our curriculum, and but the presentation is quite different because this is the industry standard which is being followed. As you can see, every page has a same font style, everything. This is the most important part because when you print this report, this is going to be published in various websites. There is a website called Seeking Alpha, the world's most renowned website where you can get extremely good equity research from reports from people who are into this industry for 25 to 30 years. So you will be getting good at it. Once you start reading more of the reports, we will be getting more used to it, how to navigate through these models and how to take your decisions. So let's start. And the first statement is three statement model. In three statement model, we have a structured presentation of everything here. And how is it coming? It is coming from this sheet. That is a data sheet. And this is an exact export of screener.in. What you would do is that let me share my browser. Um,
Yes, it will be.
just a minute. Um, screen.
Guys, everyone understanding? Like, is there any doubt? You can feel free to just check in.
Yeah, don't
So
worry
it's
about
going very
interrupting
smoothly.
me while if I say anything and you are like willing to ask something, you can just ping here or you can just say it that you have a doubt. So I will be able to better understand which parts are still confusing to you. Okay, so is it visible, my browser?
I think, yeah.
Yeah. So let me open Tata Steels. This is the particular stock that we have prepared the financial model for, so you might be able to better understand it. So the first, this is the screen, and like you can just customize it as per your requirements. We can have a session someday about how to use screener.in to your advantage and everything. And these are the information. As you can see, I took all this information from this website. What I did, just click on export to Excel, and the amount of data that you get is quite astonishing. So like this is the data, exact data you will be getting in that Excel sheet. Mm, yeah. So this is the data sheet. I just what I did, I just moved it to my new Excel sheet where I would be preparing the financial data and financial model. So just move copy, nothing else. So I'm not just doing it because I have already prepared it. So this is the data and you are not required to modify any part of this data.
Anurag, there is
This
a
is the sole raw data.
Anurag, there is a
Yeah.
doubt of few students. Like, is this data available freely? The screener, as you mentioned earlier, as well.
Yeah, this is the complete free version of Screener. You don't have to pay anything for that. You can just download it. And I will also tell you that you can modify this as per your needs. For example, the data that you are getting here, you want something extra. For example, you want EBITDA already calculated once you export. So you want to export the data for other companies like MRF tires, or it could be like Tata Motors or any company, and you want this data to be already calculated, this part, what you do is this: just go to your profile and you will be uploading it. We will be talking about that as well.